Hey everyone, my name is Nima and I'm back with another Z Investor Sit Down. And today I am super pleasured with the opportunity to talk to Maj Soueidan. He's the co-founder of Geo-Investing and tweets his thoughts at Maj Geo-Investing on Twitter. Check him out in the description below or at geoinvesting.com and try their free trial today. Maj, super happy to have you here, man. And it's great to talk to you, bro.
Yeah, man. Thanks, Nima, for doing this. I'm glad we connected on LinkedIn. That was
Yeah,
a surprise.
definitely, man. Was it just like here's another 15-year-old of my DM surprise or what?
No, I was like, this is awesome. You never know on LinkedIn what's going on.
Mhm.
You get these random messages sometimes, but
Yeah.
I love talking to younger investors. It reminds me of my youth and how I got started a little bit. It's good to see others get into it, and it's really a pleasure to always do this. So
Yeah.
we're always fighting for Main Street here at Geo. We're not all about Wall Street, and I like that a lot.
Main Street, that's awesome. Yeah, that's really sweet to hear, man. But yeah, LinkedIn, there's always good and bad stuff to it. I'll try my best to at least be that good part of it. But yeah, anyways, that introduction probably didn't do enough justice to you, man. So if you could just explain to the listeners or our audience your journey into starting investing, and you said it reminds you of your youth, maybe start from there, and how it led you to co-found Geo-Investing and that entire journey. If you could just tell our audience about that real quick.
Yeah, and then I can also send you an article too. You can post if you want.
Awesome.
Talk about that.
Yeah.
Look, I started out relatively young. I mean, not crazy young, but my dad was a big influence in my journey. And although he didn't like say, here, go invest, or you're going to be an investor, he basically did invest in the stock market though, and I used to see that and kind of observe that.
Mm-hmm.
When I was maybe like 14, 15 years old, I started kind of like paying attention to it a little bit. And I would watch him, do his research. And he used to work in the basement. And all of a sudden, once in a while, you come out of the basement, I found this great stock. And he'd talk about the stock. And it was never like IBM or Intel or Dell. It was some weird, obscure stock I never heard of. And so that was pretty interesting seeing him invest in these smaller companies. And that's really shaped my career over time, because I'll get to that in a second. But I mainly invested in microcaps and nanocaps, and those are stocks with market caps of less than 300 million, basically. And but I used to sit there every night and watch my dad, or watch TV with my dad. There was a thing called a nightly business report by an individual named Paul Kangas. I don't think he's no longer with us anymore. But it was basically a daily wrap up of the market, big movers, big losers. He'd have some analysts on, they would be talking about stocks. So I get to have that interaction with my dad watching the show and everything. And so it just kind of grew on me a little bit. And then actually one of my first jobs I got was because I wanted to check out a stock, a greeting card company. So I wanted to learn more about that industry. So I was young and I went and got like a job in the warehouse to learn more about the industry.
Mm.
But then my dad gave me a book called One Up on Wall Street, which I'm sure you're aware of. And so links right over there.
Definitely, you got a lot of cool people back there. Yeah.
And I read the book. I think I was 18 or 19 at the time, and he actually gave me the book and I read it, and it like really quick, a couple days. I just loved it so much. It was a really easy to read book, and for someone who hadn't had any like finance background or any kind of goals to go in that route, it was a really easy book for me to kind of understand. And Peter Lynch preached by what you know, kind of thing. So connected with that a little bit. So I put the book down and I had to go take this long trip with my buddy. His name is Ren, and he was my best friend throughout like high school and even college. And he wanted to take a road trip to Alabama. And I was in Philadelphia by the time.
Got it.
And road trip to Alabama to see his ailing grandparents, or I think our grandfather. And all I could think about driving that long trip was, I wish I had that book with me. I couldn't stop thinking about the book, and I wanted to get back and really learn more about investing and dig into it. And I think, wow, can you really invest in companies and make a living off it? I was thinking about that for a second. There's no cost to it, really, you think, because it's just you're only you, and you're investing your own money and making a return on that, could it be possible? So I started thinking about that, and on the whole trip, I came back and started really digging into it. I joined at that time there was a USA Today used to have this investment contest.
Mhm.
And then I'm taking you back a long time, so it wasn't online. It was all on paper and stuff. They'd send you a kit in the mail, and you do just it was a big stock contest. You'd actually call a fake broker, I guess real brokers maybe. You would call brokers up, and they would put these fake orders in for you, and everything. It was all automated on their end. So I was calling all day long. They hated me, put these orders in, trying to get a stock quote. I didn't even have any real
Yeah,
money.
they have those in our high school. You take a business course, but it's like online. You don't like call. That's kind of
Yeah,
that,
let's
take,
call it that.
that takes it back, man.
Oh
But
yeah,
anyways,
Maj again. Okay, what do you want? So that was pretty fun. I was finishing in the top 20%. It was pretty cool to be, without really any, great experience. And when I started investing, I was investing in larger companies like Acclaim Entertainment, Polygram. These are all companies that were, Acclaim was a video game company, publisher, or is Polygram's entertainment company. So, then eventually though, I started getting into smaller companies. And after having some success investing in larger caps, and then I started really, I had not really interviewed companies yet. I wanted to start interviewing management teams. And I just found it easier to find, interview a management team or a CEO of a smaller company. They were much more accessible. You can't call Intel up and do that, right? As a kid. So I started learning that this, investing in that space, these smaller companies, you have better access to management. Also, a lot of institutions don't invest in these companies. So you're not competing with as many people for information. So of course that gives you a first mover advantage, and that's really important in the stock market. So I started just learning by trial and error going in there. I ended up with this portfolio of all small companies. So I just didn't, like, oh my God, scary. And it was really incredible, man. I mean, it was so when I left, now when I was in college, I wanted it. So I was 19 years old. I was in college. I didn't know what I wanted to do just yet. I was thinking about maybe being a lawyer or something. And I read after that book, I just pivoted. This is what I want to do. So I made that my, finance. I was a dual major, finance, risk management, but it really didn't matter to me. I wasn't learning what I wanted to learn in college.
That's a common theme, man. We've had billionaires here and who went to Ivies, and they said like their college degrees haven't like taught them anything about what got them to where they are now. So that's
I'm not knocking college. I mean, there's certain concepts, like you learn corporate finance, you learn some things, but in terms of you learn portfolio management theory, and they tell you it's not possible to beat the market. They discourage you. My portfolio teacher told me I was never going to make it in this industry if I wanted to do it.
Yeah.
So all these things, there's cliche stories you hear. So I started basically, cutting class, going to a library, and just reading periodicals. There's a periodical called The Value Line, and Standard & Poor's tier sheets. I don't know if you know these. These are great pieces of research tools, and they basically summarize this company in 1 or 2 pages. Ratios and small summary of the company. And I started using that as my tool to start learning about how the analysts write reports and how they discuss companies, and what ratios are important, what to look for. Combine that with Peter Lynch's book. Then I got an intern job at Dean Witter, which was a brokerage firm back in the day, and I was able to get all access to their wonderful information they had there to do all the research. I had to make my job was call calling. So I had to, I got a big list of clients. I had to call them and sell them bonds. Get them a list. Get them interested to give to the broker to sell to. And I was like, I hated doing it. So I'd get that done right away. And then I would use the rest of my day time there to go do research on all their tools that they had. And I would go there on the weekends to do that. So I started learning how to do research, and what was important. And really something that kind of resonated with me was just trying to find this information that people are ignoring or don't even want. You can't believe in these smaller companies, some of the information is out there that no one even cares about.
Mhm.
That's public information, but you can't believe it's public information. But it's being treated as like no one knows it. It's almost like inside information in a way because no one's looking at it. So
Uh-huh.
it's an incredible advantage. And it's even more so today, by the way. And we can talk about that later, why that is. But so those are the things that kind of, I really, the first stock I ever bought, I bought it while in college. And it's with storage technology. And I made like, I think a really quick, I want to say 60, 70% of my money on it. And what's interesting about it was that was a stock I lost my money in an investment contest during my economics class in high school.
Mhm.
And when I bought the stock on paper, I put all the fake money in it. It was like $100,000, boom, and the stock went bankrupt. And I had no idea. I didn't do my research. It was a tech company, storage, this storage technology, which I thought was awesome, and then it went bankrupt. It was actually already going through bankruptcy. So I learned a hard lesson at that time was like, always do your research. Don't listen to anyone else. My teacher said my teacher was playing with me a little. He said, yeah, you should put all your money in it. He knew it was going bankrupt. Like he said, you learned your first lesson, do your own research. So then when I came out of college, that was the first time I actually bought out of revenge of real money. They came out of bankruptcy. And I learned another lesson. Wow, you can make money in these distressed companies, these out of favor companies.
Mhm.
So that wasn't so. Investing is about learning these lessons as you go through. There's no, cookie cutter approach. I just believe that you become a better investor by accumulating experience over time.
Definitely, man.
And journaling that you can. It's a lot of in my habit. You can keep a written journal also. I had that for a long time. But you just start recognizing things in your head as you come across them all the time, and you learn new things along the way too. The one thing
Definitely.
that's really important in this whole process is really finding great management teams to invest in,
Mhm.
especially these smaller companies. And that's the one thing that I really stress at Geo-Investing is we will find companies that we like, and then bring those CEOs onto our platform, and we interview them in a fireside chat format.
Mhm.
I do it in a way I would normally do it if I was just calling one-on-one. So our members get to see how we interact with management, and they get that front row seat, which is incredible, actually, which our members love. It's one of the best things we do at Geo.
Mhm.
So that's kind of where we're at, and I think I know I have audit results. So these aren't audited. It's just what I'm telling you. I doubled my money every year for many years, basically investing in these companies.
Yeah.
And I started really, I was investing during college, and then I worked at Vanguard for a couple of years between 92 and 94. I was investing during then too. And 94, I totally cut it loose. I totally left Vanguard and went, full time all in. As far as I was always a full time investor, even during college. I was making most of my money investing.
Got it.
But then I just let everything else go in 94. And it was a great run. And I just really thank my dad for getting me involved in it. He didn't love it at first. Like, what are you doing with your life? But then it all worked out. Remember, there's 20,000 stocks traded in North America.
Mhm.
About more than 50% of them are these smaller companies.
Mhm.
It's a great hunting ground for them. But the beautiful thing about it is most people are not hunting in the 10,000. They're hunting in the 10,000 big companies.
Mhm.
So you
Mhm.
have this wonderful wasteland of opportunity. And we invest in the smallest, most illiquid companies because those are the most ignored companies.
Mhm. That's
And
a beautiful way to put it. Yeah.
and the information gaps are incredible because imagine being able to go to an SEC filing to do your research at SEC.gov, and you find information in the SEC filing that says, "Wow, this is an incredible buy, maybe," and you can't find it anywhere else. No one's reading these SEC filings.
Mhm.
I'll say no one, but a lot of people aren't reading them. The average person is just probably just reading a press release. So you had to eventually that information is going to come out. One great example is a stock that, for full disclosure, I own now. The symbol is IAIC.
I see.
Yeah, IAIC, Information Analytics, and they help government or agencies modernize their database and programming infrastructure. So a lot of the code that the databases are built on are real old code and stuff, and they have to be kind of like modernized.
Mhm.
And the stock was around, I think, maybe 30 cents, 40 cents, and in 2020, and it was going down actually, and they were having issues, I guess, closing some contracts. And one of the big contracts that they were going after, that they won from an agency, was being contested by the previous owner of that contract.
Mhm.
So the stock really wasn't reacting. Now, all this was in the filings, the SEC filings. None of this was in press releases, so you wouldn't have seen this unless you dug deep in these boring
Mhm.
SEC filings. And we found a little passage in the SEC file that said, "Hey, this person who contested this contract has dropped the contestment." Right. So,
Yeah.
and then they go on to explain this is going to give us revenue, constant revenue for the next 7 years.
Mhm.
And this company had been around for a long time, but hadn't been able to grow. And this is that one transformational event that was going to change this company's growth trajectory for a long time. You're talking, and this, because this was a company where they had unpredictable revenue for many years, or lackluster growth. Now you have predictability.
Just hid it under a rock. Yeah.
So we were buying all as much as we can. We were telling our members about it, and it took days or maybe weeks for now the stock's at $3. And this is back in August 2020.
Mhm.
And the information stayed hidden. Eventually they had to put a press release out. And then
Yeah.
everybody figured it out, right? But we
Mhm.
had this incredible first mover advantage because we're investing in these really unloved microcap and nanocap companies.
Yeah.
And that's why we invest. Now there is volatility in these companies. They can be risky, of course, and you have to do your homework. But the opportunity, in my opinion, is too large to ignore. And I think young individuals, young kids should get into it. It's more fun to dig and do your research, and really you're going to find 10 and 20, 30 baggers by doing that.
Damn. Yeah. My friend and I recently we recently got into small caps, not micro caps. We're
Right.
not we're not that ambitious, but after this maybe, but small caps. And it's so easy to just gain information and talk to people there. We recently started position in this gaming stock, ticker EGLX. And
Yeah, I know them. Yeah.
you know that one?
Yeah, we wrote about it at Geo a lot less.
Really?
Yeah.
And recently I was looking at the price during class day, just huge, massive share sell off by some company that was investing in them earlier. But anyways, it's on Twitter, I'm followed by the insiders from that company. And it's so easy to just ask questions and talk to them and interview them, as well as just emailing the CEO. I haven't got anything back yet, but just getting information like that. So that's definitely something interesting. Being able to do research. Research is a bit more easier when these companies are more obscure. That's kind of a oxymoron, but still pretty cool.
Yeah, and you can actually interview, and you can reach out to them and they'll talk to you. Which that's great. Yeah, so that's awesome. Yeah, you just gotta go a little, keep going down the market cap until you get nano cap. The things even like Monster Beverage, that used to be a micro cap or nano cap actually years ago.
Mm-hmm.
That's one of the best performing stocks ever.
Mm-hmm.
So you'll be amazed. The Celsius Beverage, I don't know if you know that one. They make the energy drink.
Mm-hmm.
If it's all around you, man, these things. And as kids, if you play video games, you Fortnite, the company that made the headphones, Turtle Beach, that's went from a couple $2 to over 30. And these are things that as kids, you see these things first and you see these trends. But at Geo, that's kind of what we're doing. We're trying to find these, great companies early before anyone else finds them. We write about them. We do videos about them. We bring the management teams on the platform. We have a lot of educational articles. We have video forums where we talk live to our members to help them understand what we do and teach them how to do what we're doing.
Definitely, man. Yeah. So like other than just having better access to information and like a more wide selection of these stocks, why did you, and also just the influence of others around you like your father, why did you decide to pivot to like this niche of micro cap? Like what else have you found that's been like easier or better about them?
Well, it's more fun to me. I just enjoy it more first.
Yeah.
It's just a lot of fun, and the returns that you can get off them are just enormous.
Mm-hmm.
To get 10, 20, 30 baggers is great, man. It's a great feeling. And it's harder to get that return in a bigger company. If you think about it, if you're trying to find like a $1 billion company versus, a $20 million company, they have a lot more room for growth than the smaller ones. So it makes sense that way. So that kind of enticed me to kind of want to be there. And then less competition for ideas. You can't underplay that. It's just amazing how really much of an advantage that gives you. But that was, it was really, really simple kind of thing, man. I mean, in the end, you can invest in companies from all different types of industries, and it makes it a lot of fun.
Yeah, definitely. Like,
I mean, for example, if I pull up a stat here, I mean, let me see if I can find it here real quick.
Sure, go ahead.
To give you an example of what I'm talking about. So if you look like there was Jim O'Shaughnessy wrote a book on what works on Wall Street. And in that book, he talked about, he did a whole study from like 1927 to 2016 and kind of, compared the returns of the large cap stocks all the way down to like the smallest smaller cap stocks. And, if you looked at over that period of time, the smallest subset of those stocks there had a return of 17.45% a year, right?
Yeah.
Versus the larger cap of 9.2%. So you talk about that difference and compound that over time, it's very, very big. And that's just like taking the whole universe there, right?
Yeah.
Imagine taking that and actually doing research to find the best stocks in that area. Then you can like, oh wow, you can make those returns even better. I mean, if you look at these stocks like Walmart, Monster Beverage, Amgen, Microsoft, Netflix, these were all micros at one time.
Yeah.
So they're not, and everyone has this opinion that layer caps are all fraudulent and pump and dumps and worthless company. Well, they're not, all like that. I mean, there's a lot of them are for sure. But our job is to do research and find the best companies.
Definitely.
So whatever edge you get in micro caps, imagine the edge you can get by doing great research and trying to find the best ones. That's really, I think, important. So I just like that the facts are on your side, that it works, the stats are there, it's more fun, better information discovery, less competition. And when you think about that in anything, not even in investing, in any part of your life, if your career or you're pursuing, that makes sense. It's not unreasonable, right? I mean, when you try and gain an edge, all those things are important, not just in the stock market, but any job you're doing. And it's great that, and I think that can relate for many people. Yeah, that makes a lot of sense. That's maybe I should give it a shot. Now, the cool thing about it too is like, because the returns can be so great, you don't got to put a lot of money in. Even you can still have your hedge, your mutual funds and index funds. Put a little bit aside. I'm not a financial advisor, of course. I'm not going to tell you what to do or your audience, but it makes sense to me to say, okay, well, if I can get these incredible returns, let me put a really small amount in my portfolio that's not going to hurt if I lose it.
Yeah, just play around.
It can get so large, that it can really start to influence the return of the portfolio.
Yeah.
And even like Peter Lynch, Warren Buffett's, all those guys, the Munger, they all say, hey, the small is where you want to be. That's where the individual investor can make a lot of money because the edge it gives you.
Yeah, definitely. I kind of did that with like crypto, just like money I'd be fine with burning away. But like micro caps are a bit more interesting than crypto, to be honest. Like,
well, it's that you have piece of quality there, right?
Yeah.
you value the company, and there's something tangible.
Hmm.
Crypto's a little trickier.
Yeah, definitely. Like uh, just like money to play around with is just really fun sometimes. And like I gotta agree. It is fun to see money go up and down sometimes. Like just open my Wealth Simple right here and check out my 1 week graph of my burner TFSA. And yeah, just up and down. But
Well,
yeah,
market's down today, so
it is. Yeah. Don't remind me, man. We're trying to have a fun time here. But just joking. But like we talked a lot about the pros of microcap trading, but I feel like it can be extremely stressful sometimes as well. And especially if like companies with super low volume and have extreme price movements throughout the day. And like personally, I value company fundamentals a lot, but when I see the price jump up and down, it kind of makes me anxious sometimes. And I got to get into this whole
right.
psychology mode. So how do you usually manage these factors when you're doing your research on microcaps and talking about them on geo-investing? And what's also like on your mind, or how do you manage your mind when trading them?
Yeah, so I mean, look, when you take a look at one of the great things on our caps is also one of the hard things too to cope with is they're not always correlated with the market.
Mm-hmm.
So, as the market's roaring, sometimes the stocks won't move at all.
Mm-hmm.
So that's sometimes you got to deal with that. Um, there are a lot of fraudulent companies in the now cap space. You got to be careful with that too.
Mm-hmm.
That's really a down. And if you do have to get out of stocks quickly because of some kind of emergency in your life, and these stocks can be illiquid and tough to get out of if you have big positions for sure.
Mm-hmm.
You have to be aware of these things. But I think really investing in general is really trying to get a hold of your emotions. So when you're talking about watching your stock go up and down, and imagine if there was no chart.
Mm-hmm.
Imagine if all I gave you every day was here's a balance sheet of a company, here's the income statement, here's a cash statement.
Mm-hmm.
I don't want you, there's stock charts don't exist anymore. That's how you have to take it, you kind of have to do sometimes, take that away and see, okay, that's how you want to judge maybe if you like or don't like a company.
Definitely. Yeah.
But I'm not saying charting and looking at charts is the bad. I mean, it can give you some short-term indication if maybe a stock is too pricey or has gone up a lot, and you might not want to buy it because it's spiked. But I don't do much of that. I look at a company and say, is it worth a lot of money? Is it from its current point of view? I want to get it here. If it pulls back, I want to still buy more.
Mm-hmm.
But really, it's emotional intelligence is going to get you a long way in this market.
Mm-hmm.
Um,
Yeah.
so, and microcaps will test your emotion over and over again.
Yeah.
There's one thing that's market risk, watching volatility, right? And one thing is business risk. They're not the same thing. So just because the stock is up and down doesn't mean its profits going up and down.
Yeah.
There's a disconnect there, right? And you have to, there was when Peter Lynch was managing the Magellan Fund, in the 80s, I guess was it 13 years, he averaged 29.6% a year in the fund. The average individual investor averaged less than 5%
Mm-hmm.
a year. Why is that? And it's because emotion. So they would buy into the fund when the market was doing well, and they would sell and panic when it's going down. And and that's how you just become a really bad investor really quick if you do it that way. And it's really important for all of you, the kids, and just to learn just to walk away sometimes, believe in your research, do real hard research to get conviction. So when the markets fall and you actually get happy because you can go there and buy some stock you have real high conviction for.
Mm-hmm. Yeah. Yeah.
That's and by the way, investing in microcaps is a lonely world because there aren't many microcap investors out there. we're thought of lower class sometimes.
No, show, man. No, show, don't
Okay,
worry.
well, but that's it fuels the Main Street versus Wall Street thing for me. So
Yeah.
yeah.
I like that little analogy. Just imagine you just get a balance sheet and income sheet. Like that's what the company's based on. The price is literally just what someone felt like selling a lot one day, and then someone felt like buying a lot someday. And what
Right.
you see those little spikes like today, and long term well, what does that mean? Why were you worrying about it, sort of? So yeah, emotional intelligence is definitely it. Yeah, I gotta agree there.
It's really important, man. And look, if you want, I think for young investors to to gain an edge, there's using that confirmation of that concept of finding information. We call it information arbitrage.
Mhm.
Finding these disconnects in information and profiting from that. There's also maybe a great tool for young kids is to use, and actually anybody really, any level, is to follow what insiders are buying.
Mhm.
Follow-
Yeah,
by looking at Form 4 transactions. So looking at these companies where you have the CEO and management go in there and buying stock in the open market. And that's can be a really powerful tool for you too.
there was that Peter Lynch quote, like the insiders may be selling for any reason, but they're only buying for one reason, because it's going to go up.
That's exactly right. Yeah.
Yeah, I think that's from Peter Lynch. I'm not too sure.
It is. That's
It
I was
is.
going to use that actually. Yeah, I was going to quote that. So that's like, I'm glad you
Definitely.
thought of it.
Yeah. My my friend, whenever our portfolios are out, he just sends me a bunch of Peter Lynch quotes or Buffett or whatever quotes, just to cheer us up sometimes. So yeah.
Make yourself feel better. It's funny. It's what's funny about those guys is that, I mean, if you asked them a question today, this like 20 years ago, 30 years ago, 40 years ago, they give you the same answer today.
Mhm.
Really like just blunt.
Yeah.
People try to overanalyze the market. And it's just really buy great companies, stick with them, value them, and don't worry about anything else, right?
Mhm.
I think we try sometimes to complicate it too much sometimes, and we shouldn't.
Yeah, like Buffett may have changed how he looks, but I like he's saying the same stuff sometimes.
But that's
Yeah,
that's the thing. Like it's best and can be.
yeah,
I mean, there's really everybody wants like a trick or a golden, like, there's a golden goose, trick, whatever. But it's really the same as it's always been. Find great
Mhm.
companies and buy them at the right price, and you really have a great chance of hopefully making money following that kind of strategy.
Definitely, man. Like I feel like people both underestimate and overestimate, just like investing in general, and like underestimate as in like you just described, like buying as the market rallies, panic selling when it goes down, just underestimating like that, and overestimating the market as in like just stressing about it completely. It's a whole oxymoron. It's a whole. So if you think about it, it's a whole big joke sometimes, but like the ones who get it kind of profit off of it sometimes.
Yeah, I mean,
So yeah.
just take it for what it is, man. Let it's when you really distill it down to investing is not the practice of investing is not hard.
Mm-hmm.
Investing is actually easy. Analyzing a company is relatively, when you over the years you get better at it, is not that hard to do. It's really your emotions is the hard thing to really
Mm-hmm.
perfect over time, and how to deal with that volatile mindset over time.
Yeah,
As you get better at that, you'll become a better investor.
definitely. On that like subject of analysis, like I feel like with microcaps, you just mentioned how like you go looking for these SEC filings that no one has heard of and find this like information that we have consistent revenue for 7 years up. So how do you guys usually go about like both like clearing speculation around like these microcaps you investing, doing your research on them, and filtering out that the scammy junk that you just mentioned from the ones that are really the good investments? How do you guys go about that your work at Geo-Investing?
Yeah, so we have this. That's a good question, man, because it really is. How do you go through 10,000
Yeah.
stocks in the space, right? And distill it.
Mm-hmm.
So we have this. We call them tier one microcaps. We're looking for these tier one quality companies. We have like a 10-point checklist to go about that, and that's how we go through, like, at least to get that to define what quality is, right?
Mm-hmm.
Now, there's many ways to really distill the space down. For many years, I just used to track new highs,
Mm-hmm.
52-week new highs, and momentum. Find momentum stocks. Write them out. I used to write on a piece of paper, and then I would go back and do my analysis, if there's any good companies in that group. Then I started, okay, well, now when I start reading press release, I would start reading every press release from a nano cap company.
Mm-hmm.
And then I would do some screens once in a while, like I would put in parameters. But My favorite really is to look at the new high list and press releases together,
Mm-hmm.
looking for these tier one companies. And then what I'll do is you read the press release, then you read maybe the conference call transcripts. They're on seekingalpha.com
Mm-hmm.
and SEC filings, and you try and find information that in the SEC filing and in the transcripts that wasn't in the press release. That's some information arbitrage, right? And then I'm looking for this 10-point quality list of the 10 points, if I remember them correctly. Number one, we want to look at these companies that have been around for a long time. They've been around for maybe 20, 30, 40, 50, 60 years, just hanging around, waiting for a catalyst to happen.
Mm-hmm.
That's really one of the best kind of, if there was going to be one place to start, I didn't do that when I was younger. I just developed this list over time, right?
Yeah.
That would be a great place to start. So make that list. So you have that list.
Mm-hmm.
And then from there, just go down and say, okay, I'm looking for a good management team. So I'm looking for that, proof that this management team that's there has been, has a good track record and knows what they're doing. Number three, I want to see some insider ownership by management. That's really important. So I want some revenues and some earnings. I'm not looking for a development stage company. I'm looking for those that are already, generating some revenue. That's not going to be a lot, but I want to see something going on.
Mm-hmm.
Looking for, clean balance sheets, not a lot of debt. Or if there's a lot of debt, I'm looking to see if they have a plan to reduce that debt exposure over time. So I'm looking for clean balance sheets. I'm looking for a very clean capital structure in general, not a lot of outstanding shares. We look for companies with so when you issue shares, you have dilution, right?
Mm-hmm.
When you issue shares, the market doesn't like that. So when I look at these older companies and I see, have they issued a lot of shares over time? If they haven't, that means they've been able to grow organically or really value the equity of the company.
Mm-hmm. Mm-hmm.
So those are some of the more important pieces of it, of the criteria. And when you get that, when you combine these things all together, you start getting really great opportunities.
Mm-hmm.
And we put our stocks in the different buckets, strategy buckets. Our really solid stocks we like a lot, the core, the high conviction stocks. Then we have what we call the special situation ones, the ones that maybe aren't the prettiest yet, but we think they might be going there. They might be shorter term plays.
Mm-hmm.
Our first bucket is higher conviction, longer term stocks we want to hold for a long time. The special situation is maybe short term, but they can turn into high conviction eventually. Then we have what we call our run to one stocks. Run to ones are our stocks under $1 that we think have a great chance of going over $1. They're tier one quality companies though, that everyone's ignoring. And that's one of my favorite buckets to hunt in. I like hunting there a lot.
How do you usually like use like 10,000 companies? Is there like anything you look for specifically when you glance at something? Like instead of like going through that entire checklist when you're trying to find those those over $1 tier one buckets or what?
Yes, that's where it gets tough, man. So it's just that's the cookie cutter approach we're looking for, right?
Yeah, definitely. Yeah.
I look at each story differently, man, and that's why research can be it can be cumbersome at times.
Mm-hmm.
I'm just looking for that one thing in a story that I'm going to like or not like. So I know for me, I had to analyze what my strengths were and weaknesses were. I knew I wasn't going to be. I really didn't want to analyze banks. I didn't want to analyze insurance companies. I didn't want to be in oil and gas, commodities. That's one way I would do eliminations. With a stock that was in an industry I didn't like, it's gone right away.
Definitely. Yeah.
And then from there I would look at start reading the press release to see if there's anything in the press releases. Is the company losing money or making money? It's all game theory kind of all things. Okay. Right. If they're losing money, I used to stop there. Okay.
Yeah.
Now I'm like, then over time, you know what? No, if they're losing money, that means others are maybe ignoring it. I want to read the press release to see if there's any indication to me or the SEC filings that they're gonna be making money soon.
Contrarian. Yeah, definitely.
So it's a case by case. When it really comes down to it, those are the questions I'm asking. If they're making money, are they going to keep making money? Are they going to keep growing? If they're not, making money or growing, is that going to change and shift over? Am I finding a company in an inflection point of growth? I'm really looking. That's always I'm looking for that. If I found a company that's interesting, where am I finding it in its growth cycle? That'll give me some idea of maybe how excited I can. So I used to be really early in my career, only try and find stocks that were 1 or 2 quarters away from a key growth inflection point. Ride that for a little bit,
Yeah.
Now I try to find those a lot earlier, but it's
Definitely.
still important to know where those inflection points are, right? But you're just I'm just continually looking for edges in these things. So I can't tell you. I can tell you what I eliminate.
Yeah.
I'll eliminate. Okay, if a stock is crazy overvalued, I'll eliminate it. If it's if it's in these sectors, I'll eliminate it. But I'm always putting everything in buckets. I love a bucket now. I might like it later, bucket. I'm gonna put it there, right? Or I don't like it. And then in the bucket where might look at later, I'm putting many buckets. Turnarounds. Is it new contract coming? All these kind of things, right? Trying to kind of categorize it, and that's how I think about it. But I just know right away, and I just know when I'm reading a release like pretty quickly if I'm. And the cool thing about doing this early in life, and that's why I encourage you all to get involved early, is that you start recognizing these management teams. So there's teams I remember, 20 years ago or 30 years ago that, wow, they're still screwing up. So you have this journal of like, okay, well, you're going to be very careful trusting them because they haven't done it right in the past. So there's so many. The list is so long, man. But it's a pretty interesting list to maybe make. It'd be pretty cool maybe to have this ongoing list, right? This checklist and making it like doing like collaboration effort on it. Like here's all the things like customer concentration, right? So, okay, you might think, okay, if a company's revenues all come from one customer, 80%, say the revenue, that's customer, that could be really bad.
Definitely.
However, what if their customer is using that needs that technology so much? Is it really concentrated anymore? Because all that person's customers are using it, right? And so maybe it's not as concentrated. The other thing is, okay, well, customer concentration. My next question should be: are they doing anything to reduce that concentration? Because as that customer concentration gets reduced, the risk from the company the risk is decreased, right? The business risk goes down, and when the risk goes down in a company, the valuation ranges can go up. So you try and predict these kind of movements, right? So it's always thinking like, I look at the situation in more than one way. Maybe it's like a scenario analysis. Even when I find a negative thing, but I love like when you find something negative, I always look like how can they solve that problem, or are they solving that problem? Because they solve it, the risk of the company gets diminished quickly, and that gets, then you can have increased, more rapid revenue growth, more rapid EPS growth, maybe, or better quality growth, and then an expansion of the valuation multiples.
Yeah, that makes sense. Just generally when companies kind of like are carving themselves out when they're already in a kind of crappy position, it definitely leads to stuff like that. So that's a good way to put it for me. Yeah. Anyways, this question comes from our community, but you mentioned previously how you found and I totally agree on this. The best way that you kind of taught yourself investing was through the lessons you learned and through the mistakes that you've experienced. Personally, I can definitely agree with that, as starting off in a bull market kind of made me a bit overconfident. But how else would you recommend, and reading books by like people who know what they're talking about, Peter Lynch, Buffett, why am I free? Benjamin Graham. Yeah. So what other ways do you feel like is a good way for people to just get started themselves and teach themselves investing, like, and even what they want to do in investing, whether it would be like go completely passive, go completely micro cap like you, or what do you recommend?
The quicker you get from book to paper trading to real trading, or investing, the better you're going to be, right? Because
Definitely.
ultimately, and there's one thing about reading books is great. I mean, when I read Peter Lynch's book, that was the only book I read for years. I didn't want to read anything else. I didn't want to get confused. That was it. And so you don't want to get too, if you read too many books, you're going to get confused and maybe not go down the path as quickly as you should. It's really important to find know what your skills are, right, in the beginning, and trying to find your advantage. You want to be a trader? Do you want to be a long-term investor? And to me, long-term investing or buying quality companies to me was important. I didn't want to do day trading. But there's and really get as many hours as you can as quick as possible, because those hours compound over time. And it can make you a better investor. So for me, it was reading the Peter Lynch book, going and playing in an investment contest for a few times, and then putting my money to work right away.
Definitely.
I learned those lessons. It's really important. I think that finding a mentorship or communicating with talking to other investors and will help you a little bit. I think it's really interesting that you can do these days is write articles. I would actually try and take a company that you like and write about it. That way you learn a lot by digging into a company, and those things you learn from, you'll start to translate into other things you do, other companies you look at too. Really important. So I mean, that's really the reading's important, but reading isn't everything. You got to apply it, and that's really important to do that.
Yeah, definitely. That writing part's pretty, like, I relate to that a lot. I write like Twitter threads on company analysis and stuff like that. And like, I guess this just goes out to the listeners. You learn best by doing it.
You do.
Yeah. It kind of makes me mad when I see people that are all say that you got to do this, and you'll be good. But they haven't tested it out. Just you got to learn by doing, and whatever mistakes you make along the way it's just part of it. So imagine,
and you can't be afraid to make mistakes too. I mean,
exactly.
it's like, one of the worst things we can do is regret over mistake or taking a loss, because if sometimes it feels better just to get rid of a loss and move on, and you made your mistake and just move on. And you'll be amazed how much better you do when you take that regret and put it away, or don't mourn the loss and move on. But yes, I mean, I think like for example, at Geo-Investing, we actually work with a lot of our members to actually they help us with our research. We give them tasks. We say, hey, we're looking at this company. Maybe you can help us with the research, and that's a good learning process.
Definitely, yeah. Like, there's a reason why people get given homework at school, because you gotta do it. So yeah.
Sure.
Sorry, my mom just texted me for some reason.
That's okay.
I don't really have any questions left personally, but is there anything else you wanted to talk about, or?
I think that's good. I'm glad we did this, man. No, I just think I really encourage all your listenership, man, to really look at these smaller companies and get involved in doing the research. And if you ever want to learn more about what we do, you can come to geoinvesting.com, and we can definitely have Zoom calls, and I'll teach you what we're doing. And I think you'll be really impressed with all the hard work we put in every day at our website. We have model portfolios where we categorize model portfolios in different types of strategies that we use to help our members understand what we're doing. The video presentation, video pitches of companies that we like. So just I think it's. Yeah, I mean, obviously I'm biased because I'm on Geo-Investing and I run the company.
Yeah,
but our performance, which I'm not going to get to, is pretty incredible actually. And if you come to the Geo and you take a free trial, you'll start seeing all that in there.
Definitely, man.
So,
yeah,
that's about it, man. So maybe we can do if you I'll think of some things. Maybe we can have another podcast again.
Definitely. If you have one of if you have one of your own, I'm down to come on. But yeah, that's definitely we can definitely do something in the future, man. It was great talking to you, bro. Yeah.